We detected an unusual trade worth about $16.4 million on AppLovin stock, ticker symbol APP. But here's what makes it more interesting. AppLovin stock recently dropped more than 50% from its high in just a month. And so in this video, we will reveal our options trading strategy based on our analysis of this unusual option activity to find out if this wealthy investor is bullish and buying this opportunity or bearish and selling into this crash. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better financial decisions. This is why smart money always stays one step ahead before the rest of the market catches on. No wonder the rich keep getting richer. And so to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape for the most recent trading day, March 14th, there were no unusual trades with significant volume or quantity. But we were still able to find something very unusual that happened on March 14th on the option chain. As we can see here, for the May 16th options, at the 250 strike calls, about 4,000 contracts were being traded. But notice that there were 5,000 open contracts at the open interest, which is more than the 4,000 contracts being traded. And so, based on our analysis, this wealthy investor was closing these options, but also opening a new options trade by rolling them to a higher strike price here at the 300 strike calls. And notice how the open interest here is only 1,000 open contracts, much less than the 4,000 being traded. And so we can conclude that this wealthy investor was opening new contracts here and not closing out contracts, because it would not be possible to close out 4,000 contracts if there were only 1,000 open contracts. This means that these May 16 options at the 300 strike calls are the new open trades. And so we can calculate the estimated cost of this new trade, the price of 41.00. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade costs $4,100. And since there was a volume of about 4,000 contracts, we multiply that out and we get a total of $16.4 million for this trade. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, back to this trade, let's break down the data even further. Based on our deep research and analysis of multiple variables and data sets, this wealthy investor bought these 300 strike calls for about $4,100 each. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive profitable, because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay, which means that as time goes on, this trade will lose in value. And that is why You can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though these call options have a strike price of $300, the stock needs to trade above $341 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. As you can see here on the option chain for the May 16 options, we traded the 400 strike calls and the 430 strike calls. POS stands for our position, and the green color means a buy position, and the red color means a sell position. And so we bought these 400 strike calls and sold these 430 strike calls as an option strategy known as a vertical call spread for a price of $4.75 each. And so when we analyze this trade, notice how our trading strategy is also going long bullish like this wealthy investor's trade, because as the share price goes up, this trade also becomes more positive profitable. But we did not have to spend $4,100 for each contract or trade. We only spent $475 per trade, nearly 10 times less. And notice how our max profit on the blue line here is $2,525 per trade, which means that our risk to reward ratio is 2,525 reward divided by 475 risk, the max loss or cost per trade, giving us a 5.31 ratio. In other words, we could potentially make 531% profit on this trade. And so the reward is in our favor, meaning we stand to gain more than what we could lose. Now, obviously, it's unrealistic to win every trade, and we expect some losses. That's why we focus on trading strategies where our gains outweigh our losses, helping us stay consistently profitable over the long run. But as we mentioned earlier, this is still a risky trade, and so we use position sizing to manage our risk. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades that we share on our website. We'll put a link to our website here where you can also learn more trading strategies to boost your profits and gain an extra edge beyond just picking the best stocks to beat the market. Let us know in the comments below. Do you think it's time to buy AppLovin stock? Or do you think it will crash down? As usual, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.